Sourcepoint launched in 2015 after a $400 million exit. I was AdMail to Google. Now working on a sort of a three-tiered pricing plan. What folks can pay him on a volume of API call a plan, a pure SaaS plan, which is traditional seat and unlocking features. And then lastly, what percent of spend is Sourcepoint helping you protect? They take under 1%, call it take rate on that. They're growing nicely. They raised recently a Series C in 2020 for $17 million. They've got a team of 60, evenly distributed, call it, and a nice go-to-market plan, leaning on a lot of his ex-teammates from AdMount as I look to scale to 50 million. This year will be a stretch goal, but definitely in 2024, serving 500 customers today. Hey folks, my guest today is Ben Brokus. He's the co-founder and CEO at Sourcepoint, now leading the strategic direction. It's a data privacy company for digital marketing. He's got a proven track record of growing companies that transform the digital content industry, founding and leading the preeminent supply-side platform AdMeld to its acquisition by Google for a reported $400 million in 2011. He then served as general manager of global marketplace development team. Prior to that, he drove business and operations for Jump TV and AOL. Ben, you ready to take us to the top?
Sure, let's do it, buddy.
All right. Your bio said 400 million reported. That was in 2011. I mean, can you create clarity there? Is that confirmed? Is it close enough?
I mean, it's all about how do you do your fancy accounting. There are bonuses on top of the cash price that was paid that were given to employees, and so it was significantly above that in terms of price. But it's also, what gets recorded in the purchase price is the complexity of the exact price. But yeah, that was startup number 3, and we did quite well. And I'm
you have co-founders there or sole founder?
No, co-founders. Co-founder, a different Brian. I have a co-founder currently named Brian Kane, who was also my chief operating officer at AdMeld. But I co-founded that business with a gentleman named Brian Adams, also an incredible operator, engineer, and product person. We founded that company in 2007, exited in 2011. This one, after 3 years at Google, founded in 2015, have been rocking and rolling almost 8 years. And it's been a great journey.
That's great. Now at AdMeld, were you guys pretty capital efficient, or had you raised a bunch of money to grow that company?
We raised a bunch of money, and we have had a history of working with the best and most incredible venture capitalists.
How much had you raised at AdMeld?
40.
Okay, well, that's not terrible. So if it's 40 and you sell for 4, I mean, you read companies all the time today that, they raise 100 million, they sell for 100 million, no one makes any money.
That doesn't work out really well.
It doesn't work out well. So when you say a bunch of money, just to be clear, again, I would call that pretty darn capital efficient. It was a good win for everybody.
Yeah, where I come from, $40 million is still a bunch of money. It's not 400 million, it's 1.8 billion, but 40 million in most people's minds is a bunch of money.
Yeah, well, it's all relative is how we like to look at it here on the show. Let's talk about Sourcepoint. So was this a problem that you had at AdMeld? You said, I need to leave and actually just build this for everyone else, or how did you identify this problem?
Oh, no, I mean, I think data privacy is one of those things that has been building for the past 3, 4, 5 decades. I mean, data is the lifeblood and is the oil of what runs the digital enterprise today. And the understanding that from a user perspective, most users don't understand what the value exchange by giving their data away. And more that data can be stolen or utilized in ways that the individual user doesn't want. Digital advertising, digital marketing made a lot of this data available. And there are a number of brokers that don't act responsibly, like good digital citizens, don't act ethically, and don't keep that data secure. And so while I was at Google, after we almost created the problem, while there, we developed a protocol called real-time bidding. And the RTB protocol enables marketers to bid on individual users based on their data profile. And that made data available on just about everyone. Understanding that you're in thousands, if not hundreds of thousands of data graphs around the world might make you feel uncomfortable. At any rate, we knew that the digital media ecosystem needed to clean up its act, and we wanted to provide a solution. And that's what we did. And we created the best solution in the world for large-scale digital enterprises to evaluate what their data privacy risk is and provide a series of tools in order to mitigate that risk and act in an ethical and good citizenship-like
So Ben,
manner.
we'll go back and get the backstory here on the first customer, second customer, et cetera, but help us understand today as the company stands. If you just described the product well, for a customer that wants to pay for and use the product today, what sort of market are you serving? What's the average ACV, would you say? $100, $1 million, something in between?
Yep, something between, call it $100,000 a year in annual contract value. And our clients are the biggest media companies in the world.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here, and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview.
What do you price against in terms of your utility-based pricing? Is it number of seats, number of data, number of profiles protected? What do you price against?
It's more about implementation and volume. So we serve the digital enterprise. And so in terms of how we integrate, it's on every website call, every initiation of an app with an SDK. And so however many times you're pinging us to launch our platform is how you pay for one of our products. I think another product is a pure SaaS play, and a third is about how much of the spend that we are helping you protect, if that makes sense. So product 1 and 2 of 3 are very SaaS-based models based on volume and evaluated data. And one is really on the percentage of overlap that we protect.
And that third one that you're talking about, percent of spend that you're protecting, are you taking, like, is that a traditional take rate model there, percent of spend, or no?
Yeah, but it's basis points. So with companies that spend hundreds of millions of dollars of marketing in buying advertising or buying data to inform addressability, we depending on how much your spend is, we take basis points in order to protect that spend and make sure that you mitigate risk as it relates to placing messages on places that it shouldn't, or purchasing data that hasn't been evaluated in the appropriate way.
So Ben, when you say basis points, though, you're talking like under 1%, right?
That's exactly right.
Okay, got it. Okay, that's super helpful. Then again, the first one is pricing on volume of API calls, it sounds like. And then the second product is based on like a pure SaaS fee, unlock XYZ features and this many seats sort of deal.
That's exactly it.
Very cool. Okay, now that we have that part of the story, take us back to the early days. What year did you write the first line of code for the platform?
Yeah, it was the end of 2015. We wrote the first code. I think it got us till beginning of 17, where we had our first clients, and then scaled up. I think we've averaged about 40% growth year over year. Some years were better, some years were less good, but that's kind of how we've averaged out. We've been certainly incredibly successful among the digital marketing ecosystem. We are now expanding beyond that to a more generalized enterprise solution. We realize that being the best at what we do has translated very well to other verticals. And so we're spending a lot of time making sure that we're the easy button for data privacy programs. And for those teams, everyone within the Fortune 1000 needs to have a series of tools and a platform by which to execute their privacy program. And we've penetrated very deep into the media and marketing space, and now we're really expanding to the rest of the ecosystem.
Can you put all that in a bundle for me? So across all those markets you just described, how many customers are you serving today?
We're solving problems for about 500 customers today, and we're hoping to again grow by 40 to 50% this year.
That's great. Now, talk to me the original funding here. I think you did a 10 million Series A back in 2015, and then a 16 million Series B in 2017. Were both those rounds totally pre-revenue, or was a Series B raised after your first customer came in?
I think our Series B was after our first customer came in. We had limited customers then, but those customers were very, very large enterprise customers, and so there was a proof point there.
I see. I guess the question I have is a lot of second time, third time founders will listen to this show. And I always wonder, someone that has a $400 million exit, if you want to, swing for the fences, go build a massive company, you want to try and own as much as you can. Well, why use $10 million of other people's money there for your Series A in 2015 instead of just, saying, I want to own 100%, keep as much as I possibly can, and then scale this thing?
Oh, because it just makes every difference to have smart partners on the VC side of the equation. I think it's a great accelerator for anything that you want to do. If you want to change the world, then your best bet at changing the world is doing so in conjunction with people who have seen and have invested in changing the world. And, I've had the incredible luck of working with some of the most accomplished VCs in the industry. You can see, on our cap table, North Zone, Spark, Graycroft, Excel, Foundry. These are all incredible companies with incredible partners that have been very, very helpful along my entrepreneurial path. And so, again, I wouldn't raise venture if you're just starting a lifestyle business or you're starting something that has been done before. But in all of the cases where I've founded companies, we were doing something that has never been done before. And we set out to, like you said, swing for the fences and do that with partners. And I think no man is an island, and you want to increase your success rate by working closely with partners.
Ben, one of the things, though, obviously about raising capital is using your island analogy. The waves are crashing harder, right? Whether it's Graycroft and Spark coming in your Series A or North Zone in your Series B, they have a growth expectation, which can limit your optionality into the future. You've got to accelerate speed. These guys are expecting 100%, especially in the early days, maybe 200, 300% year-over-year growth. You manage an average of 40% year-over-year growth. The expectations there are not aligned. How do you create alignment?
Again, by having a long-term view and having an understanding of our particular investors for particular stages, and they will help you when they can help you, and when they can't, they will say that they can't. And so you find other investors that are more aligned with the particular stage of a company that you have. And there are times by which the market doesn't move as fast as you would like it to move. And in our case, data privacy legislation in the United States moved much more slowly than we thought that it would. And still to this day, we don't have national data privacy legislation that has been passed, and we're probably a couple years away. That would account for 60 to 70% of our revenue coming from Europe. We do see
That's today. 60 to 70%.
Picking
60% today comes from Europe because of the laws over there.
Correct.
Yeah.
Correct. And now, where we've had already 4 states pass comprehensive data privacy legislation, now a 5th, the tailwinds are starting to blow very, very hard. And we're seeing an exciting opportunity to grow much more quickly in the North American market.
Mm-hmm. And then I guess, Ben, take me back that Series A. Most folks, now look up 2015 was when we were just launching the show, so I don't have a ton of data points from back then. But most folks, Series A, the past couple of years, you're selling 10 to 15% of the company. Did you sort of do something standard? You were sort of in that same range.
Yeah, exactly.
Okay, and same with Series B. You're selling 5 to 10%, sort of in that same range.
Same thing.
Okay. How do you think about Arrowroot coming in with 17 million in 2020? It's not labeled as any kind of round and crunch base. So how do you think about them? Is that a Series C?
Sure. I mean, again, you can label them however you want. They were the right capital for the right time.
Well, was it the same paper the Series B set on, or did they repaper the deal at a higher valuation?
Oh, certainly. They repapered it. There are a number of different negotiations and buttons and levers that you do with different funders at different times.
Mm-hmm. Was a part of that Arrowroot deal secondary? Or was it all for operating capital?
All for operating character. As you said, both my co-founder and I have been lucky enough to have significant exits in the past. And so, we wouldn't turn it down if it was at the right terms. It wasn't something that we were interested in at that time.
Sorry, just to be clear, if you incentivized your early employees in 2015 with option grants, they've been waiting now for 5 years. It might be nice to create secondary for some of them. So it necessarily wasn't for you, but have you created a liquidity opportunity for any of your early employees who are incentivized with option grants?
Certainly not.
Interesting. How do you think about that moving forward? If you want to buy yourself more time, but folks are getting anxious having these options for 5, 6, 7, 8, 9, 10 years, do you try and alleviate that pressure at all?
I don't. I mean, I'm not hiring people with the incentive of being able to cash out their options. If the company does well and if a strategic comes along and purchases the firm for a very high price, then fantastic. And then we'll all share in those spoils. But if not, I don't see funding for secondary for employees to be something that's going to be the primary driver of a funding event.
Tell me more about the team today. How many folks are full-time, and how do you think about your engineering, your product, your sales teams?
We're about 60 people worldwide. We also have some contractors around the world. We're pretty evenly distributed across engineering, product, sales, and marketing. We have offices in New York, in London, and in Berlin. Tell
us about your first sales hire. A lot of folks, it's our number one question we get is, Nathan, I'm at 10 million in ARR. We want to make our first enterprise sales rep. What should quota be? What should OTE be? How'd you put that together for you and your ACV?
Oh, it was just spectacular to be able to work with people that had worked for me in the past. My VP of sales became my CRO for this company. We had, it's a wonderful, wonderful way to found and start a company, to be able to bring someone on early that you trust that will help you get to that $10 million ARR.
Well, Ben, teach my crew though. Are you talking is it a $1 million quota and a $250K OTE, or sort of what ratio did you start with?
Well, we're doing enterprise deals. Yeah, I think it was more like $1 million a quarter for him and the 2 sales reps that he hired right away.
Altogether.
And we were able to scale correct. We were able to scale pretty quickly in those initial quarters. And then, there were some bumps in the road, and we had to reevaluate the technology that we were building and the different use cases. We did exactly that, and course corrected and evolved, and then got back to growth. So again, none of these opportunities are all kind of straight line. Everyone takes their own zigging and zagging in order to find the right level of product market fit, as well as the appropriate tools internally to utilize in order to drive the appropriate go-to-market strategy.
And Ben, before we wrap up, you mentioned earlier, ACV $100,000 and customer count about 500. Can we multiply those to get a revenue range?
You can do whatever you'd like.
Well, I don't want to say anything misrepresented. You said earlier 500 customers, and you said ACV 100 grand.
We don't disclose. Yeah, we're not disclosing the details, but you certainly can do the math.
Well, you disclosed 500 customers and you disclosed $100,000 ACV. If I multiply those, it puts you at 50 million in ARR. Is that accurate?
That's not accurate.
Okay, so is it because you moved enterprise?
No, we have a number of different products. And so while that may be the ACV for our standalone products, all of our customers are not on all of our products.
I see. So you're working on getting as many of the 500 at that 100,000, expand them net dollar retention to the $100,000 per year level with your 3 different pricing plans.
Exactly.
Can you break 50 million this year, you think, or is that going to be a 2024 goal?
If everything goes to plan, certainly, but it will happen in 2024. Whether it'll happen in 2023, it's a bit of a stretch.
All right, fair enough, Ben. That's helpful. Thanks. Let's wrap up here with the famous 5. Number 1, your favorite book.
My favorite book, The Hard Thing About Hard Things.
Number 2, is there a CEO you're following or studying?
Many. I mean, today I was, there's an interesting thing that's going on in the finance sector, and I think we all need to be aware of what folks like Jamie Dimon are doing and how they navigate the current pressure on the finance sector.
Number 3, what's your favorite online tool for building Sourcepoint?
Ooh, my favorite online tool. I would say that what's used most today is the Google suite of work products. How about that?
That's a good one. Number 4, how many hours of sleep do you get every night?
At least 6.5.
Okay, that's good. And situation, married, single, kids?
Married, happily, for almost 21 years.
Oh, congratulations. Any kiddos?
Nope.
No kiddos. All right. And how old are you, Ben?
I am almost 50.
Almost 50. Great. We'll call it 48, 49. Last question. What's something you wish you knew when you were 20?
It's all going to be all right.
Guys, there we have it. Sourcepoint launched in 2015 after a $400 million exit. That was ad mail to Google. Now working on a sort of 3-tiered pricing plan. What folks can pay him on a volume of API call a plan, a pure SaaS plan, which is traditional seat and unlocking features. And then lastly, what % of spend is Sourcepoint helping you protect? They take under 1%, call it take rate on that. They're growing nicely. They raised recently a Series C in 2020 for $17 million. They've got a team of 60, evenly distributed, call it, and a nice go-to-market plan, leaning on a lot of his ex-teammates from AdMount as they look to scale to 50 million. This year will be a stretch goal, but definitely in 2024, serving 500 customers today. Ben, thanks for taking us to the top.
Thanks for doing it.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.